Hey guys, Joe here, back with another video. Today I wanted to talk about selling covered calls on AMC stock. Today is Monday, May 24, 2021, and as you can see on Yahoo Finance, AMC is trending, so let's go ahead and dive deeper here. AMC had a very bullish breakout, 13% rally intraday, and after hours is up nearly a whole percent. So if we look at the 1 month chart, AMC has just been slowly gaining momentum. $11 back down to $9 and slowly inching its way back up. So almost at $14, and it looks like it wants to revisit its all-time highs here of 1990. And if you guys haven't used Yahoo Finance before, it's a really powerful all-in-one resource that gives you market cap, day range, PE ratio, analyst buy or sell recommendations, and most importantly, headlines. What is the headline surrounding this stock and what is the momentum behind the move, right? So let's go ahead and dive into the options chain. Click on the options tab here, and you want to navigate to maybe the 2-week mark. So set the strike date here, expiration date of June 4th in about 2 weeks. And as you can see here, anything highlighted blue is the put section. Anything not highlighted blue would be the call section. So bearish below, bullish above, and we're almost at the $14 mark currently. So for June 4th, I'm looking to sell something out of the money. So something above the current strike price, right? I'm looking at the $15 strike price for June 4th, and that would net me between 89 to 90 cents per option contract. So again, per option contract, you would net about $89 to $90 per option contract. The reason I want to sell this $15 strike price is 2 reasons. One, it is out of the money, above the initial price I paid for. I bought AMC at a really low price and it's currently quadrupled. And number 2, I get to keep all of this option premium. As an option seller, you always get to keep the premium no matter what. Even if the shares are assigned, the shares are called away, you get to keep this regardless. So a few things I wanted to cover about AMC. Volume. So for the $15 strike price, we have 6,903 options traded today. Secondly, open interest. These are the current option contracts available in the marketplace as open positions, but have currently not closed yet. And lastly, implied volatility. 141%, which is insane. That's huge. For a normal stock, you want the implied volatility to be at roughly 30 to 50%, but 141, that is meme world, that is meme stock land, and you as an option seller, you want to take advantage. The reason is this is so high is there's been a lot of buying and selling, and the price has been fluctuating a lot, and that all of that goes into account when calculating implied volatility. So the higher the implied volatility, the higher the option premium you will gain. So if we scroll down and we look here, some of these numbers are just off the charts. 200%, 250. So again, this is the reason I chose $15. The trade executed on Schwab. And the reason you're seeing a different price here is I recorded this Yahoo Finance video after executing the trade, so that's why you see a few dollars in difference, but essentially they're almost the same thing. I placed that trade in the morning and now I'm recording this video in the afternoon, so you do see a slight dollar difference here. At the close on Friday, June 4th, there could be 2 potential outcomes. A, the price stays below my strike price of $15 and I get to keep the shares and I get to keep the premium, or B, the price closes above the $15 mark and my shares are called away, my shares are assigned, and I keep the premium regardless. So either way, I see it as a win-win regardless of what scenario plays out. Remember, I paid a lot less for AMC than the current price. So at whatever strike price it's called away at, I think I'm really at a net win here. So in summary, I just wanted to cover a way of selling covered calls on stocks you already own. This is a good way to generate passive income for a stock you already hold. I'll leave a few resources in the description as a way for you to learn more on the subject. If you guys have any questions, please drop a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one. Open the Schwab app, navigate to the Trade tab. At the top section, navigate to the Options tab. Under Symbol, select your symbol, AMC. This is a call. And we are going to check. We're going to set $15 call price. And instead of 5/28/21 expiration in 4 days, we are going to set it to June 4th. $15 call. That's in 11 days. Done. Action. Sell to open. We currently hold 500 shares of AMC, so that'll be equivalent to 5 total calls. Quantity 5. You always want to do a limit sell order type because you got the best ask price. You'll receive more money when you do a limit sell. I'm not in a rush to sell these, so you hit limit 0.96, which is our upper limit. And as you can see here in the middle, the bid and ask is between 95 and 96. We want to set it to the uppermost limit, 96. And day only. If it doesn't execute today, we can try again tomorrow. So everything looks in order. June 6th, 96, great. Review order. Total amount received, including fees, will be $476.70, and we're going to go ahead and place the order now. Order received, thank you. We're going to click on order status, and it's closed. It filled right away. Position is closed. We're going to receive verification. There it is. Got this notification from Schwab.